and I've professionally dedicated my life to gold mining. But the reason I've been focused on silver the last few years is because for me, the opportunity in silver right now at an 80-to-1 silver to gold ratio, looking at the fact that industry 100 years ago only made up 10% of silver's demand, 10%. Today it's 55%. So I think we've got one of the best setups for the metal. And that's where I think, if you are a precious metals investor, one really needs to focus on why silver is up 50% over the last 12 months and why it's probably going to go up another 50% in the next 12 months.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Boehm. Today, we have a fantastic discussion lined up. We're fortunate to have with us SHAWN KHUNKHUN. SHAWN is the CEO, president, and director of Dolly Varden Silver Corporation and has over 20 years of experience in the capital markets, mineral exploration, and development sectors. He has served in a variety of strategic roles throughout his career, including investor relations, corporate development, CEO, director, and executive chairman. He's also the director of Goldshore Resources, Inc., and a director and executive chairman of Strike Point Gold, and he's facilitated over $1 billion in capital raises in his career. SHAWN, thank you so much for joining us today.
Thank you so much for having me, Gary.
So let's begin with the economy. Given the current economic indicators, including rising deficits, unemployment, and a slowing housing market, what is the major risk to the U.S. economy because of these $2 to $3 trillion annual deficits? And in your analysis, with this type of fiscal dominance policy, how would a crisis affect the metals and the miners?
Hey, great questions, Gary. One of the things that I focus on is the interest that's accumulating on a daily basis from existing debt. So, if we were to solve all the problems of the world today, and we're just talking about the U.S. right now, the interest that's accumulating on a daily basis is running at to the tune of $3 billion a day. And I'll bring that into my world. So, I work in the mining world. I've got an emphasis on silver. So if we took the top 13 silver miners, the total value of the top 13 silver mining companies is $37 billion. So if you look at that, the debt accumulation of $3 billion in 13 days, in less than 13 days, the interest on the debt surpasses the entire silver mining industry. So we've got some serious structural and systemic problems, and we don't have solutions. I see we just had an election here in my province of British Columbia. I'm in Canada. You've got a major election occurring on the 5th of November. I don't see any politicians really addressing the real issues, and these are, what needs to happen here, in my opinion, Gary, is we need to have austerity, right? We need to make some big cuts. The government is way too big, and we keep kicking the can into the future. And the problem is, whatever analogy you use, a consumer that has a lot of debt, we could use the analogy of you're just increasing your credit limit, but the interest is still racking up and you haven't gone after the problem. Some people like to use the analogy of somebody who's addicted to drugs, right? And it's not, it's just relief. It's not pleasure at this point. So look, I think we're in a tough spot. I don't have the answers. All I do know is if you look back in history, gold and silver have been money for 5,000 years. And what got the world through some tough times in the past, when I go back to the Great Depression, and so when I look at the Great Depression, it was a time in the Western world where you had mass unemployment, and you had a lot of human suffering. What got the North through that was gold and silver mining, and the North prospered. They maintained their purchasing power. And so my focus for myself, my friends, my family has been to focus on gold and silver to get me and my friends and family through what I think is as troubling as the time as we experienced over 100 years ago.
Well, it's interesting and a good segue for this question. Sean, Jim Rogers, another famous billionaire investor, he recently said, in times of huge crisis, which I think we could both agree that the Great Depression was a huge crisis, the world always returns to gold. And we probably will again in the next crisis, but there's not enough gold to take care of the whole world when everybody starts piling in, unless gold goes to 30,000 or something like that. So what is your view on what Jim said here, including there being another huge crisis, that the world will return to gold, and gold will need to be, 30,000 or something like that to accommodate all who are going to pile in?
I was listening to a couple of very, very smart, savvy investors, people like Rogers, and I think based on that accumulation of the $3 billion a day, I think the number that gold would have to go to today to solve the problems in the United States of America is almost $120,000 an ounce. That's the number. And I'm trying to be objective, and I'm it's easy to go down our little rabbit holes and be in that self-fulfilling loop of what we're interested in and what we like, whether it's a political leaning or whether it's a financial. But I'm trying to be objective, and I'm trying to look at a politician that I wouldn't have voted for, Barack Obama, right? And Barack had talked about how the fact that we weren't on the gold standard had led to prosperity and growth throughout Asia, Southeast Asia, Asia, that not being on the gold standard enabled growth of emerging markets. And so trying to look at all these things objectively of, what's the right approach? And look, I don't have the answers, but what I see occurring is if you look at what's happening with the BRICS nations, we're witnessing the formation of a new monetary regime right now. And this is not the first time it's happened. You go back to Bretton Woods when the U.S. dollar established itself in dominance. You go back to the U.K. pound, and all these currencies that were successful on launch had a component of either silver or gold within them. And so I think that the BRICS nations, Russia, India, China, South Africa, Brazil, they are going to have a new monetary system that's launched, and it will have a component of gold and silver. We saw Putin announce that Russia, for the first time in its history, will be including silver in its purchases, not only gold, platinum, and palladium, but silver. And look, Gary, I'm a gold bug. I have been for the last 20 years. My parents are from India, and I grew up around the metal, and I've professionally dedicated my life to gold mining. But the reason I've been focused on silver the last few years is because for me, the opportunity in silver right now at an 80-to-1 silver to gold ratio, looking at the fact that industry 100 years ago only made up 10% of silver's demand, 10%. Today it's 55%. So I think we've got one of the best setups for the metal. And that's where I think, if you are a precious metals investor, one really needs to focus on why silver is up 50% over the last 12 months and why it's probably going to go up another 50% in the next 12 months.
So in your answer, you shared about the BRICS, you shared about Russia, and you shared about that gold to silver ratio. All three I've got questions on, but I do have a question I want to ask you before we get to those. Sean, in 1955, I'm going to lay this out for you. The United States had enough gold to cover its liabilities to other central banks and governments, which was about $13.5 billion at the time. At that time, Americans' gold reserves exceeded official dollars abroad by over 160%. By the summer of 1971, right before Nixon pulled the U.S. off the gold standard, America only had 25% of what it needed to make good on its commitments to exchange gold for dollars. Today, assuming that the reported U.S. gold holdings are accurate, America currently only has 8 to 9% in gold as coverage to pay off its foreign debts. So when we start to think about where the gold price would need to go to look something similar to what it looked like prior to 1971, when they took us off the gold standard, well, it needs to be materially higher to much higher. But getting back to that 25% coverage America had, it would need to be about a 3x just from here. What path do you see gold taking?
It's a great question. Look, I think gold is merely a mirror, right? It's merely just a reflection of a unit of measurement. And I think that, it's interesting in financial markets where people feel like they've missed the move in gold. The price of gold has gone up $1,000 an ounce in the last 12 months. And some will say, well, you know what? I've missed it. And that was the feeling if you go back to 2008. Okay, when gold started putting in new all-time highs, it reached $1,000 by January of 2008, in and around the time Bear Stearns went under. And people felt like they'd missed the move. It had gone from $250 an ounce to $1,000, went up 4x, and the move was over. And here we are, 3 times the price. And so look, gold's role, it's really more of a question of the unit of measurement. And right now, in the last 60, 70 years, the US dollar has been that unit of measurement. And in that unit of measurement, we see it marked at around $3,000 an ounce or close to it. Gold's role will continue to be as it always has been. It'll be a store of value. It'll be, hedge against inflation, hedge against systemic risk. So I don't see gold's role changing. But again, we're in a moment right now where, look, the last crisis we went through was a banking crisis. It was a real estate crisis. It was a crisis that impacted us at a banking and institution level. And what had happened during that crisis is the sovereigns had bailed out the banks, essentially. Here we are, fast forward 15, 16 years since the last major crisis, and the sovereigns are now insolvent. And so my question to you, Gary, is who bails out the sovereigns? Do we need a reset? I don't know how this unfolds. All I know is what's going to protect me, preserve my purchasing power is what has been money for 5,000 years and what I think will continue to be for the next 5,000 years.
That's a great point. So let's go back to the BRICS now. As de-dollarization progresses, the BRICS nations are increasingly going to trade in their own currencies, settling their net balances in gold. That much is known by everybody. Won't this shift away from treasuries and towards gold to settle trade? Won't that drive up both the demand for gold and gold reserves held by the BRICS current countries, thereby increasing the floor under gold prices?
Absolutely, 100%. And what we've seen is, I want you to consider this. Around the year 2000, global dollar-denominated reserves, so the US dollar represented 72% of reserves throughout the world. Today, that number is 58%. So we've seen a reduction of about 14%, with that 14% reduction in US dollar reserves globally, we've seen the price of gold up 10 times in value. We've seen the price of gold go from just over 200 to almost $3,000 an ounce with just a mere 14% reduction in the global reserves. My point to you is, if the U.S. and confidence in dollars and currencies and nations and fiats, it's a confidence game. And it's not going to be a slow, progressive trajectory down. You won't see another gradual 14% over the next 2 decades. It'll be moving at a much faster trajectory. But just think, if we had another 14% move down, are we going to see the price of gold go to $30,000 an ounce?
Well, that's what Jim Rogers is suggesting. So maybe, I don't know. Well, so Shawn, you mentioned the gold to silver ratio. That chart reveals that silver, like you said, is very significantly undervalued compared to gold. The ratio mean historically since 1915 is around 52.8. Currently, like you said, it's over 80. If it were to revert to mean at today's gold price, we're looking at what, $52, $53 silver. Is the gold to silver ratio still a usable metric, and are you expecting it to revert to mean, or is it now irrelevant, as some have suggested?
I don't think it's irrelevant. I actually think that if you look at it from, if you look at historical coinage, why was there a 15-to-1 relationship historically? When coins were minted, there'd be 1.6 grams of gold and then 15 times that in silver. Why was that the measurement? Why was it 15-to-1? Well, the reason for that is, naturally, in the Earth's crust, there's a 16-to-1 relationship. For every 1 ounce of gold, we have 16 ounces of silver. So, they rounded down to 15-to-1, and that was the relationship for the last 5,000 years. So in modern times, in the last 100 years or so, you're quite right. It's been closer to 50-to-1. But think about it like from a practical standpoint. All the gold that's ever been mined is still with us today. That's not the same for silver. And going back to the point I made earlier about silver's growing industrial demand, we're at a point right now where silver is really scarce. It's extremely scarce. It is so scarce that primary silver mines make up about 28% of the silver market. They're very, very, very rare to find. Most of our silver comes as a byproduct. And my point here is, we're mining, for every 1 ounce of gold, we're mining 7 ounces of silver. So it's even worse than that old historic relationship of 15-to-1. It's even more scarce. And so, where I'm convinced we're going is, by the end of next year, I think industry is going to consume all mine supply. We're mining about 800 million ounces of silver a year. We're recycling another 150 million ounces. Now, historically, we've been in a bear for silver 98% of the time in the last 100 years. There was 2 moments where silver caught a bid, 2011 and 1980. There was 2 moments where silver became relevant and was once again establishing itself as money. And in those 2 moments, we saw the gold to silver ratio, we saw it go to about 30-to-1, most recently in 2011. I think we're actually going to be at a place where, based on industry consuming all mine supply and the investment case for silver, now that gold is putting in all-time highs, there's going to be so much investment demand for silver. And I look at countries like India, and if you look at Q1, if you look at the first quarter of this year, 35% of all silver demand came out of India and solar. So in India right now, the average Indian consumer, and that is a growing segment in the population, okay? They are priced out of gold and rupees. They are turning to silver jewelry, and they're turning to silver in investment. The same thing is happening in China. Historically, China's never had a gold standard, but they've had a silver standard. Okay, so the East recognizes silver. So look, I actually think forget 50 to 1, forget 30 to 1, get prepared for 15 to 1, maybe 10 to 1.
Wow, that would be incredible. The way you're laying it out with the supply and demand, with the sovereigns, I can completely see it, especially since when you think about how gold, we've kept, all mined gold throughout history is still with us, but a lot of the silver has been thrown into landfills and just destroyed. But speaking of sovereigns, can you foresee a scenario where a sovereign purchases a silver mining company to lock up the silver that's in the ground, since there's this increasing demand, supply is flat, all in order to ensure that they have access to needed supply?
I think it'll be done in a different way. And the way it'll be done is you'll have um, nationalization, expropriation. So I think what you'll have is the end goal will be to acquire, but it won't be through the purchase. It'll be through confiscation. And I think you're gonna, countries will come out and say it's in the national interests of the country to do that. They'll probably ban exporting, and so I see us moving to that. And I think the proof in that is the premiums miners who are in what we deem safe jurisdictions where there's a stable rule of law established, countries like Australia, countries like the United States, like Canada, some of the Scandinavian countries as well. And I think that investors, if just in my lifetime in the mining industry, seeing what's happened in places like Venezuela, like Ecuador, like Colombia, like Mexico, and unfortunately for silver, they say silver comes from the camp, Chile, Argentina, Mexico, and Peru, and that's why if you can find metal in Nevada, in British Columbia, this is where I think companies, the companies that need this stuff, the car manufacturers, the photovoltaic companies that need this stuff for solar, they're going to they're going to want to know, they're going to want their metal, but they're going to want to know they've got a safe sourced metal that's produced in a way that's thoughtful to the environment, that adheres to the highest social and governance standards.
It seems like what you're talking about here is very protectionist, and that kind of thing could spread to other types of commodities, especially in today's decoupling that we're seeing around the world. Shawn, let's go back to what you mentioned earlier, and that was with Russia including silver in their precious metals strategy. Now they're going to be basically acquiring silver as part of their reserves. This is the first time that I'm aware of that a sovereign is doing this. Is this kind of a way towards the movement towards what you were just describing? And just as the central banks were purchasing gold and putting an extremely high floor under the price of gold, if Russia and other sovereigns start to add silver to their reserves, won't that do the same thing to a much smaller market being silver?
Absolutely. And I think there's two components to why a sovereign would want to wrap their arms around silver. There's obviously the historic investment case, but there was news that hit over the weekend where Israel was launching missiles into Iran. And I calculated that, over the weekend, there was about 1 million ounces of silver that were in those warheads. And so from a strategic, from a military standpoint, silver plays a critical role in weapons. So not only do you have it as an integral part of the green economy, of the electrification of the world, but also in military components and aspects. Silver plays a very large component that's often underreported. It is a very critical strategic metal, and I almost think it's comical that it's not regarded or classified as a critical mineral, even though it's probably the most critical.
And it likely is just not talked about. It may not be classified in the paperwork, but it certainly is in their actions. So, Shawn, silver's more than a monetary metal, as you've already explained, which it had been for most of its existence. Now it's equally, if not more, an industrial metal. Fed Chairman Powell came out a few weeks ago with more soft landing talk and saying that the next rate cut will not be 50 basis points like the first. Silver responded as if it was expecting economic activity to pick up, just like an industrial metal would. Would you speak into that for us?
Well, look, my take on it is I'm looking for evidence that goes against the narrative that I believe. I'm constantly looking for things that will debunk this precious metals bull market that I believe we've entered into. And I really just I don't need to go any further than the two events that occurred in the last 30 days. One was the big stimulus out of China. And I think for silver's industrial component, that's very bullish. And then despite the trajectory and rate of cuts, the fact that we've gone from a heightening cycle to a pause to a lowering cycle, silver's monetary demand. So you've got both industry and investment, shining, one from the Fed, one from China. And so I think it's, I don't see a reason why. And again, I'm looking at the statistics, from one application, solar's gone from 3% of the market to 14% of the market. It's going to 50% of the market. You've got other, Samsung just launched this battery, right? It's an incredible battery where you can get a full charge in 9 minutes. It can go 600 miles. It uses 1 kilo of silver. And at the same time, the market has gone from 1.2 billion ounces a year down to 800. And it's getting more and more challenging to find economic projects. We're having to go further into the jungles and the mountains of the world to get this metal. And I think history's got a way of repeating. And I go back 400 years ago to, who was the richest person on the planet? It was an emperor in China. And how did he become the wealthiest man in the world? He taxing in silver. And I think, history will repeat. And I think that, gold and silver are once again establishing themselves, within the zeitgeist of the population as money. They always have been, but they've been hidden. And now they're coming to the forefront, but it's still not page 1 news. It's not even page 5.
So in a recent Ernst & Young survey of mining companies, it was found that their top risk is the lack of capital that they've experienced over the last decade. As with oil starving miners of capital, when their products are vital for civilization, that all but guarantees higher metal prices ahead. Is this the scenario that you see coming, higher prices ahead due to constrained capital?
I do. What's the most troubling statistic that I've seen in the last 12 months has been, I work in the mining industry, and, there's a statistic around brokered private placements. So these are financings for mining companies that need that capital to advance their projects. And if you go back a decade, you go back to 2013, there was about $6 billion in brokered financings. And if you look at the numbers from 2023, a decade later, $2 billion. And so, and if you look at if you analyze what 2013 was, it was a time where the floor fell out of the metal. The gold price had fallen from 1550 down to 1300 in one single day. So that was a very difficult time in the industry. And the fact that a decade later, with all the inflation that we're, sourcing 30 cents on the dollar to a very, very tough time, now things have picked up. Things have picked up significantly. And 2024 is a year where we're actually, I just saw some numbers this morning, we're up to 5 billion. So we're on the way back, but we're a far cry of where we were in 2010. Now, the other thing that's picked up is mergers and acquisitions in the space. We're starting to see some really big deals occur on the M&A side, and that is a sign that we're moving into a market. And again, all these signs, if you go back in history, gold leads, then the gold miners, then silver, and then the silver miners, and we're starting to see the evidence. But I'll give you one statistic. So we have an exchange here in Canada that we refer to as the TSX Venture Exchange. It is predominantly the mining index for the small caps. Okay. This exchange today is around 600 points. At 3,000 points. Okay, Gary? 3,000 points in 2007. In the crash of 08, it fell from 3,300 points down to 685 during the crash of 08. It's lower today than it was during the GFC. Now, what's the Dow done? The Dow's gone from 6,500 to over 40. All these other indexes are through the roof, right? So the exchange that holds the miners. So, this is an unprecedented time in history, or if you look at where commodity prices are relative where equity valuation, that disparity has never been greater. And it's just, it's a moment where I'll tell you this much. I've studied the mining equities, and I'll give you a number here. So in 1980, the price of gold went through $800, right? The most profitable time to be in mining equities was 1996, 16 years after the high in gold. Now, why was that? And what I attribute that to is the gold mining companies can turn a profit in this price environment. So even if we've seen the high in the metals, long after that, the equities can run for over a decade because they're now in that new price environment where, their costs, their operations are paid for, they're fixed, and now they're experiencing. And so we're entering in this new era, this new dawn, where I think we're going to go from, and capital is going to see when it's, when the Magnificent Seven lose their luster and money goes to find a place where it can appreciate. I think it's going to come into real things, hard assets, and particularly these metals that the world needs.
Wonderfully positive for those who are in the space. So, Sean, is there any specific indicators or factors in the current silver charts that resemble those that you can observe in the 2010 charts prior to the significant price surge of that time?
Well, look, the price looks really healthy. The price looks exceptionally healthy. Anytime you get a market that's, trading above its 50-day moving average, its 200-day moving average, we're in a 12-year breakout. But, for me, why it doesn't, why I am, we're still trading at, still only 60% of the value of the old high. Silver is the only asset class under the planet that hasn't taken out its 1980 price high. So I'm starting to get encouraged, but, Gary, wake me when we're through 50. Like this is, these are early days. And, I'm looking for a substantial breakout. We've seen it in gold. If you go back to 2019, gold was in a range for 6.5 years, but 1050 to 1350 and really a defined range of, 12 to 1300. And then it broke out and it went on a run and it went up 50% in 13 months. Well, silver made that move in 6 weeks in the summer of 2020. So when the silver moves, what would take gold 13 months will take silver 13 days. And so the type of move that we're setting up for in silver, we've seen the price of gold go up 50% in the last 12 months again. And so you're gonna wake up one morning, I believe, and the price is going to go from being quoted in the mid 30s to the mid 40s.
So let's talk about this big move that's expected, Sean. If we see this big move in silver to the 40s, to the 50s, or bumping up against 50, the previous high, that many analysts and experts, including yourself, are expecting, how is Dolly Varden Silver set up to take advantage of that move?
Yeah. So look, my strategy 5 years ago, it's important, to understand what I was thinking and evaluating and auditing the vision and then looking at how it's played out, right? So the idea 5 years ago was I came across this asset and everything that you're talking about, safe jurisdiction, high grade, past production, like Dolly had all the attributes that I rated. And the company was valued at $20 million. Okay. My strategy was, let's not give silver away. It was $16 an ounce spot silver at the time. My strategy was, let's not take this mine back into production. We're not getting real price discovery. Instead, what if we tried to grow the mineral inventory? Well, how do you do that? We hired scientists, we hired geologists, and the best place to look for silver or gold is next to a silver or gold mine. So we expanded and extended the known veins through drilling, through exploration, through discovery. The other thing we did is we went out and we tied up some mines regionally. We made some acquisitions in the neighborhood. Okay. So what we did is we took what was a 40 million ounce silver inventory and we added 100 million ounces to it. Okay. Now, the business has gone from being valued at 20 million Canadian dollars to 450 million today. And I don't think the silver price has fulfilled its price discovery. I actually think we're just in the early innings of silver waking up. So I see Dolly Varden's potential to be measured much, much higher. But the onus is on us as a company to continue to grow, to continue to add to that mineral inventory. And so, how you benefit for a company, so you have your producers, right? What we are is we're a mineral bank. And the idea is we have a value to the in-ground, the in situ enterprise value per ounce, ounces in the ground. There's a value to that mineral inventory, and that those ounces were trading at pennies, they're now trading at dollars. And you multiply that by 140 million, and that's how the company can grow by hundreds of millions in terms of the value. And look, my goal and my ambition was big. It was bold. I wanted to become top 10 silver equity. And we're not there yet, but we're off the bottom, we're off the mat, and I'm happy. The share price is up 700% since I took over. The market cap's grown 2,000%. And so we're part of the way through that journey, but we've got a long way to go still.
Well, outstanding, and congratulations to you on that success so far. So this has been a wonderful conversation. Before we wrap up here, and I ask Sean our final question, I want to point everyone over to the Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise titled, "If you don't own gold, you know neither history nor economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com. Put in your email address to subscribe and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Sean as much as I have. Please let him know, hit the like and subscribe button, and leave a comment below the video. It's now time for the Golden Nugget segment. Sean, Grant Williams, who I know you know, in 2022, after the Russian invasion of Ukraine and subsequent sanctions by the U.S., he stated the following: I think we'll look back in a few years' time and realize that sanctioning Russian foreign exchange reserves was every bit as big as Nixon closing the gold window in August of 1971. Literally, the U.S. just told the world to buy gold. Since that time, gold has risen more than 35%. The central banks have been buying more gold than any time since the 1970s, and their buying spree literally has not stopped. Will history, Sean, reflect back and say that sanctioning of Russian reserves was as big as Nixon closing the gold window, and that was the moment where the U.S. told the world, go buy gold?
Yeah, and I just add one piece of color to that, which is, it was really the confiscating of assets. So not only was it taking Russia off the SWIFT system, but the message was, if you don't fall in line with what we want you to do, you're out of the system. And, we saw a mini example of that here in Canada, where we had some protests to vaccines. And essentially our government froze bank accounts and, basically said, look, if you don't fall in line with what we want you to do, your system. And I think it's a dangerous precedent. And so I think, there's more to it that goes beyond Russia. And it goes back to, an agenda that, some of the globalists have, and it's an agenda of control. And so I think the way to fight that is precious metals that are stored outside of the banking system.
Outstanding. Sean, this has been a wonderful conversation. Thank you for coming on to Metals and Miners, being so generous with your time, analysis, and ideas. It's been wonderful to spend the time with you. Would you please share with the viewers where they can learn more about your work and how they can connect with you?
Yeah, absolutely. Listen, we have a team, a communications team that would love to hear from you and talking to shareholders. You can follow us at our website, which is dollyvardensilver.com. We're very active on X at Silver Varden. And look, old-fashioned telephone. I've got a toll-free number, 800-321-8564. Call, email us. We love talking about gold, silver equities, our project. Gary, I appreciate you having me on. It was wonderful to meet you and your wife down in Boca Raton at the Rules Symposium. And I really like the work you're doing. So it's a pleasure to be here.
Well, I appreciate that. I've been following you since then, and I was just going to say how it was a pleasure to meet you down there. And everybody who's listening, if you're not following Sean, even just for his commentary on the economy, on markets, and on the metals and mining space, you need to, but also his project is a very important one. You need to be paying attention to what's happening over at Dolly Varden. Congratulations on the success that you've had there. It's wonderful. Continued success to you. I look forward to having you back on sometime soon, Sean. Thank you for being here with us. And everybody else, thank you for watching.
All the best, Gary. Thank you.
So this has been a wonderful conversation. Before we wrap up here, and I ask Sean our final question, I want to point everyone over to the Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise titled, "If you don't own gold, you know neither history nor economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.